Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin crashed to $60,000 this week in one of the most violent sell-offs since the FTX collapse, briefly wiping out over $2.6 billion in leveraged positions. The Fear and Greed Index plummeted to 9, its lowest reading in 42 months. Bitcoin now trades around $66,500 after bouncing from $60,000. That represents a 52% decline from its October peak above $126,000. The February 5th drop exceeded 13%, marking the steepest one-day decline since November 2022. The carnage extended across all crypto markets. Ethereum fell below $2,000, currently near $1,900. XRP dropped 15% to $1.30. Solana, Dogecoin, and BNB all posted double-digit losses. Total crypto market capitalization declined to $2.3 trillion, down from $4.2 trillion. Corporate Bitcoin treasuries face unprecedented stress. MicroStrategy, now Strategy, reported a $12.4 billion quarterly loss on its 713,000 Bitcoin holdings. The company's average purchase price sits at $76,000, meaning it's currently underwater. Strategy shares plunged 17% and are down 76% from their November peak. Bitcoin miners are particularly vulnerable. With production costs between $70,000 and $87,000 per coin, current prices put most operations in unprofitable territory. Marathon Digital transferred $87 million worth of Bitcoin to exchanges, sparking forced selling concerns. Institutional flows tell a troubling story. Bitcoin spot ETFs recorded $434 million in net outflows on February 5th alone. Weekly outflows now exceed $1 billion. The derivatives market experienced extreme dislocation. Over $1.4 billion in positions were liquidated in 24 hours, with 82% from long traders. Bitcoin's volatility index spiked to nearly 100%. Analysts are divided on the bottom. Stifel predicts Bitcoin could fall to $38,000 based on historical 70% drawdowns. The 200-day moving average near $60,000 represents critical support. In a surprising divergence, XRP has shown relative strength. XRP-focused ETFs recorded $1.3 billion in inflows since November. Ripple's integration of permission domains and hyperliquid partnerships are attracting institutional interest. Regulatory tensions are escalating. Treasury Secretary Bessent called crypto opponents of the Clarity Act nihilists. Representative Ro Khanna launched an investigation into the $500 million UAE investment in Trump-linked World Liberty Financial. Bitcoin's relative strength index hit 17.6, the third most oversold reading in its history. Past instances at these levels preceded significant rebounds, though timing remains uncertain. The market is at a critical inflection point. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.